But Peter, I want to start on something that you pointed out this week, which is that the news on China chips and this administration's approach to chip curbs was a bigger deal than we might have initially made it, at least in financial media circles. Talk to me about why you see that as a catalyst.
Yeah, so I think when we had FOMC day, Trump initially tweeted something about China tariffs. Things weren't going great. Then all of a sudden he came out something on chips and maybe reducing some of the restrictions on chips. Then even yesterday when we went through the whole UK deal, NASDAQ was doing okay. It was kind of drifting lower. Then it went to Q&A, and again, he kind of focused on chips in China. Mm-hmm. So I think that's what's growing us. And I think Jensen Huang's done a great job making sure he's talking to Trump and expanding on what he thinks the chip industry needs. And it seems like the president's being open to suggestions and is going to allow chips to be sold to some countries where Biden had put some restrictions on at the last minute.
Is that a signal to you that tech is the sector that brings us out of this moment of market volatility?
Yeah, and I think it should be, right? I go back when we were very bullish at Academy Securities, kind of coming into this administration, we really felt there was going to be a focus on let's do things that are important for national security. Let's focus on producing those at home. We did think at home meant some of our close allies as well. I'm not sure that's still on the table, but that's where we should get is build America, build that sort of thing. And I think chips is a huge part of that. So it's good to see that focus being brought back to it.
And how would you advise investors in terms of just thinking about investing in tech right now, but specifically investing in chips, given the weakness that we have seen in semiconductors?
I've kind of a little bit overweight for the first time in a while. I'm cautious. I don't want to do anything crazy, though. I really want to see how this weekend comes out, because I think I want to take some chips off the table, which is really hard, because the last time the president said to buy stocks, all you have to do is buy stocks, and 24 hours later you were rewarded with huge gains. I'm not sure that's going to be the case on Monday. I feel we could wake up to some disappointment. Again, to me, Trump's all about ebbs and flows, right? When things are good, he likes to stir it up. When things are bad, he steps back and calms things down. Things seem so good right now. I feel we're in that stage where we might get a disappointment, come into a weak Monday, Tuesday next week, and that's when you want to start buying again.
So is this moment in time the ultimate teacher of the lesson to be fearful when others are greedy and greedy when they're fearful?
Yes, especially, I think we learned that during Trump 1.0, and he's right back to the table, right? He got very aggressive on tariffs. The market hated it. He backed off. Now we're getting some deals that are okay. The market's comfortable. We're back above Liberation Day levels. But I think he's kind of itching to let's push back. I want my agenda through. And he does believe that tariffs generate revenue. He does think it's going to bring back manufacturing. I'm not sure he's going to be right on that, but he does believe that. So I think you're going to see a pushback right now.
What do you think is the most overlooked defensive play in this market right now, then, given that you kind of have to go against the tape in order to generate alpha in this environment?
I think you kind of want to own bond yields globally. I think bonds, again, there's some issues. I think we've had some selling pressure. The deficit's not really under control. But I think we do get this one-time spike in inflation through the tariffs. That keeps the Fed on hold. But after that, it comes down. And you look at real yields, 2.5%. Even if we get a small inflation spike, I think it's a really attractive level. So I want to own bonds. I actually like the muni space in particular. So for a lot of clients, we started buying back a lot of closed-end munis in my recommendation accounts for individual investors. I think the closed-end munis are interesting here. They trade at a big discount. That's where I want to put some money in and earn 6%.
Is that a sign of just how odd this particular moment is in financial markets, that you're talking to me about munis and international bonds? Meantime, the U.S. dollar is still under pressure.
Yes, it's crazy. And when I talk to the large asset managers right now, so when I look at the hedge fund community, I think they're pretty much on balance, right? So they're no longer super bearish or super, they were overly aggressive. I do think they have all these, pairs trades on. And I think that's where you see the pain. And every day you kind of see why did this pair do this weird thing?
Right.
And it's because some hedge funds started getting stopped out or decided to reduce risk. And I think everyone's got to be very cautious. Liquidity is very low out there. And so it looks very active. But if any big trade comes through, it immediately moves that market up and down 0.5%. Not 2% like it was doing a couple weeks ago, but I think the market's overreacting. So I want to be nimble. I want to trade this a little bit and take advantage of kind of these pops and dips.
And when there is a pop, do you do what Bank of America's Michael Hartnett was saying this morning, which is essentially buy the rumor and sell the news? Do you sell any rally?
I think that's what we've been trying to do, is you sell the rally. And to me, this is all still going to come down to China. And what's as neat, and we're starting to talk a little bit more, is also budget 2026, right? That, to me, was ultimately going to be his prize. Can he deliver on that? It's starting to make its way through the process. That, to me, I think, and I'd really like to see that, because it can turn back to some domestic strategies where I feel everything we've been doing so far in tariffs has been very zero-sum game, antagonistic. We can, I think, do a lot domestically through that budget that could spur growth without causing all this friction for us.
Yeah, you mentioned three things that could move markets in the coming weeks here in the short term: China, chips, and that 2026 budget. Where do you see that netting out? You say it can move markets. Is it going to move markets in a way investors like?
I think right now where we're at, I'm slightly cautious. Again, I feel like everything's getting so well priced in. And the one thing that I'm still concerned about, and I don't think the UK did anything to address this yesterday, is I am concerned about American brand sales globally. That we have done such a thing that, U.S. brands were aspirational, and this is probably a bit of a stretch, but you go back to the Soviet Union, Levi's represented freedom. And I think to this day, right, people want to be associated with American brands, they like the affiliation, it's aspirational, and I feel a lot of damage has been done to that by the actions we've taken against a bunch of these countries. You've seen, tourism is way down, you've seen some other brands, I think Tesla most noticeably had German sales were way down. Is that a trend? Is that a one-time bump? I don't know. I'm a little bit suspicious that with 40% of S&P 500 earnings coming from foreign revenue sources, that could be a bit under some pressure, and that we're going to see lackluster sales of U.S. brands globally for the foreseeable future.
And how can you put that toothpaste back in the tube?
Right, and I think that's a very different thing. So it's one thing for the leaders to negotiate trade deals, but when people go to the store, they still thinking like, I want to own this brand because I like it, or do I not want to own this brand because now I feel America's treated us unfairly? And I think that's a risk that's not being priced into S&P 500 earnings.
Really important context there, Tchir. Thank you so much, and I know you're going to stay with us for the hour for more context, so appreciate it.